trade alerts. Let me start this lesson by giving you some quick context first. So as a trader, there are only two productive things that you can be doing with your time. The first thing is executing trades, and the second one is research and development. So executing trades, this is like doing your analysis. So doing your technical analysis, drawing lines on the chart, actually taking trades. So you're literally clicking the green and red button and journaling the trades. So this is everything that you do before, during, and after of actually doing everything like to take trades. And research and development, this is everything to do with coming up with ideas, testing ideas, collecting data, reviewing data, and tweaking your rules. So executing trades, this is the thing that is going to generate cash flow for you. Think of this like going to work. Research and development, this increases your rate of generating cash flow. So think of this like learning a new skill so that you can get a promotion and a pay raise. If we spend 100% of our time on execution, we'll never improve. If we spend 100% of our time on research and development, then we'll never actually make money because we're just constantly doing research and we're not actually like executing, right? So how we allocate our time as traders, it does actually matter. Time is arguably the most valuable resource that we have. So it makes sense that the best traders know how to trade their time for the highest ROI effectively. So this is how I do it. This is how I split my time. So when there is a lot of available opportunity in the market, then I'm going to be spending more time on execution. So for example, if the market conditions are absolutely prime for trading breakouts, specifically to the long side, because it is a raging bull market and there is so much opportunity, then I'm going to be spending more time actually taking trades rather than doing research and development. But the opposite, when there is very little available opportunity in the market, this is when I'm going to be spending more time on R&D. So think about a window of time where there's like no volatility, there's no volume, nothing is really moving. It's a very boring type of environment. This is the best time for me to spend more time on research and improving the edge that I currently have, rather than staring at a chart which is going to feel like watching paint dry until the next opportunity comes in, right? So when there's no opportunity, I'm going to be doing R&D. So this is where alerts come in. They help tell us when it's time to lock in and execute trades. And also when we can just chill out and focus a little bit more on the research and development side of things. Okay, I'm going to show you how I set up alerts on my charts such that I can always be notified whenever price is approaching one of my key levels, so that I can have plenty of time to prepare and make a decision beforehand whether I do or do not want to take this next upcoming trade. So I'm going to start with drawing some relevant support and resistance levels. So I've just picked here a swing high and a swing low. This swing high is the absolute highest point of the day. And this swing low is just a swing low that was formed, let's take a look, about 2 hours ago. So two relevant levels to trade from. So this is just, by the way, this is just how I do it. Okay, you can do it in whatever way that you want. So the first thing is I actually don't like to set on an alert on the actual level itself. I don't like doing this. The reason why I don't like doing this is because once price actually finally does hit the level, what happens is TradingView is going to open up a pop-up about this big on my screen, and it actually covers the chart, and I have to quickly click OK after the alert pops up before I can actually see what's behind the alert, as in before I can actually see the candlesticks. So I don't actually like having an alert directly on my level. Now what I like doing instead is I like to set alerts slightly before the level, and I usually like working in threes. So I'm going to set 3 alerts on the way to the level. And I'm going to make them, and by the way, you can click and drag it where you want the alert to trigger. But generally, I like having it something like this, where I have one alert which is like really close to the level, another alert which is like a little bit further away, and then the third one is a lot further away than the original 2. And I'm going to be doing the same for my upcoming support level as well. So 1, 2, 3. So there we go. 3 alerts. Easy peasy. I'm just going to do it like that. There we go. So now what's gonna happen is as price starts moving closer to either the support level or the resistance level, I'm going to be alerted to it. I prefer doing it this way because I found that by only having one alert on the level itself, and let's say I'm looking at a different chart, as soon as the alert goes off, I'm going to have to switch to the chart instantly. I'm going to have to switch to the chart and then make a split-second decision. Like, I would literally have less than 60 seconds to make a decision about whether or not I want to enter that trade or not. And I'm going to have to close the pop-up as well, which is a little bit annoying. But having it this way, the alerts are going to be, like, I'm going to be looking at the chart as price is unfolding and as it's getting closer and closer to my level of interest, right? So it's getting closer. I'm going to get the first alert, then the second one, and the third one. By the second one and the third one, this is where I'm going to start making the decision about whether I do or do not want to enter the trade. And also, as price is approaching that level, especially once the second or the third alert fire, I can actually throw on my risk reward tool preemptively and set up, let's just pretend that price did something like this. I can set up my risk reward tool preemptively, set my stop and target to whatever I think my trade is going to look like once I get my trigger. And then also I'm going to add some little notes to myself just to prepare myself and say something like, if price spikes the level, do not take the trade. So remember, when price approaches any level that you draw on the chart, you can A, bet on a breakout, B, bet on mean reversion, or 3, just don't bet at all, and you basically take no trade. So as price gets closer and closer, I'm preparing myself for which of these 3 options to take. Am I going to bet on a breakout? Am I going to bet on a reversal? Or am I simply just not going to trade? Am I simply just not going to take this trade? And I'm going to use the text tool as price gets closer and closer to that level to basically make notes to myself about when I should pull the trigger versus when I should not. It just makes it a little